Okay, so some of you guys are not part of the Spark, but that's totally fine. I figured since we're gonna do something impromptu, might as well have like everyone come in who can catch it. And we were kind of having a bit of a discussion, kind of about like an analogy that I was about to bring up. And as I was typing, and I was like, this is some of the meanings really lost on this. So I want to just say it so it really comes across. And basically, like, it's a poker analogy. You guys probably know I don't really love like poker analogies. However, like there are a ton of parallels. So even though it's cliche, it was something I recognized as we were playing a Trace for a Cause. I had this kind of occur to me as I was talking to somebody the other day, and the idea is this. So imagine, we're all at one big poker table, like all the short sellers, all of us small cap traders, right? Everyone comes in with a different stack, but there are people with tiny stacks, tiny accounts, and people with big stacks, right? And I want to explain kind of how that affected 2022, how that affected 2021, how that affects us today, and how you can think about it. So, what happened after 2021? Obviously, during COVID, such huge years for a lot of people, and people are ready to push it even further, ready to continue on their, train, their huge run. And what happened was at 2022, there was a dead stop. Like, markets crashing, war in Ukraine, interest rates are going up, there's people pulling money out of the market. A lot of small cap companies unable to finance different deals and stuff like that. So our niche got kind of fucked for a little bit. Well, I say a little bit, but it was about, I would say maybe 6 to 8 months. And I know like a lot of people are like, oh, just adapt, motherfucker. And the thing is, like, anyone saying that just has no fucking clue how the market works in small caps. I mean, it was truly abnormal. So, what happened was like even traders, like one of my best friends, top trader at his firm, like number one, not even number two. Okay, when I say top, number one, uh, he made like 75% of his money in August, like after August. Okay, between that was all chop. So a lot of people talking big game. There was only one reason why anyone was making money this time as a short seller. It was because of liquidations. It was because of the Chinese pump and dumps that were dying like 70% with huge odds, and people were doing really weird things like putting the risk out way far out. Like it wasn't the kind of trade where it's like, hey, I'm gonna lose 1 R. It was like, yo, this thing, if it works, it's gonna make a shit ton of money. Let's risk zero. Let's risk like full. Let's risk a big number, like a 10%, 20%, 50% of the account, like crazy reckless things. All right, so this is just to give you some context for what is happening here. So in 2022, things are going bad. Like it started out real cool. Maybe the first 2 months, like everything looked like it was going to continue, albeit a little bit worse than before. And what happens is people are pushing it. All of a sudden, liquidity drops down. Like even today, I would say liquidity is about 10, a factor of 10. You take whatever was back then, what you could risk, divided by 10. That's what it is now. So when that started to drop off, people with big accounts started bleeding it away, trying to push it, compound that money, become like, the next big trader. And I think they had every reason to believe that, because why not? Like why not? Why couldn't I just all of a sudden 2x or even 3x my year if I just 10x my previous year? Like this is a conservative goal. Well, remember I said everything dropped off by a factor of 10. There's a lot of risk with that. All your trades, slippage, up, down, sideways, it's just not a good look. And not only that, but the market ceased to function correctly. So a lot of the mean reversion trades, like they'll still go up. Like people are still buying them, people are still shorting them, they're still getting squeezed. But what happens when they come down, they just go in 50% pullback, going sideways, no range, no fade, can't make money. You put on the risk that you're supposed to, but you can't make money. So what happens is those accounts start getting distributed amongst other players, and those players lose their positioning. Okay, so more or less a lot of things get equal out at this point. If you didn't, let's say, take money out of your account, then you possibly could have given a big chunk of it back, or you could have drawn down quite a bit. And this, I know this is a long intro to the analogy, but this is very important to understand. Okay, so personally, I've always wired out from the beginning, from even risking $50, risking $100, like the entire time, all the way up to risking, 1,000, 10,000, 20,000, 60,000. Always wired out. I wired out 90% of the profits I ever made. But what happened is in 2022, I'm like, fuck it, I'm just gonna go for it. Like, I don't need the money anymore. Let's try to grow it. Let's try to compound. And of course, like I mentioned, like everything goes bad in terms of liquidity. You take the normal risk. You take what should be able to be made back normally. It's a normal drawdown, but it just happens too many times. So all of a sudden, like what should have been preserved ends up being given away. So you have this section of traders who understand the markets, who are able to actually get a good return during those volatile times, and now unable to really make too much money. Just kind of, if they're making money, it's a little bit slow. On the other hand, you have a lot of traders that are just finding these like insane opportunities on the side, these liquidations, right? Not only that, but they're betting the farm on it. So when they win, they're getting bigger and bigger and bigger. They're getting bigger for the next time that trade happens, and it was happening frequently enough to the point where like everyone wants to be on it. Everyone wants to know, how do I do this? Who's doing that? But the overall market was not unhealthy. Okay, so this is where we go. This is where we finally tie it all in to the poker analogy. So imagine we're all at a poker table together, right? And some people are coming in with really big stacks. Some people have tiny stacks, and other people in between. Well, a lot of people who had big stacks either came in with a big buy-in and lost most of it because of the market itself, or made it in a different kind of way. Like they had some money, but they won a couple big hands, and all of a sudden they have a fat stack, like more than anyone else. So how do some players play when they have big stacks versus small guys? Well, they just start shoving. They start putting like big bets down, like in the middle of nowhere, like pre-flop. Okay, let me just throw down, your entire net worth right now. And so when you're that guy on the opposite side of that poker player, you're like, bro, what the fuck? You're not even letting me play. You have to fold it, because if you fuck around and find out, your risk of ruin is literally like, I'm going to blow up right now. So you fold, that guy collects the blinds all around the table. Okay. And what is that kind of like? It's like when a trader is willing to basically have like this insanely wide risk, or this insanely, large dollar drawdown. They don't really like respect the stops or anything like that. They just kind of put the money down, let it go against them. When it works, maybe they'll add against themselves and make it a little more risky, but bigger reward. Or maybe they just kind of like hold on and then when it works, they make a tiny amount because they didn't actually really optimize the trade. They just kind of won, right? Whereas you have all the smaller guys that are like, dude, I got to manage the risk. Let me cut here. So they're like pushing the stock up and they're folding because they have to for preservation. So you got this guy just collecting checks. Okay. Now, what do those people do, right? Most people keep all of their stack there, like their entire account in the market. They don't pull money out. They just want to grow bigger, risk more. So they keep doing that over and over and over again. Keep shoving. Okay, it's working. I'm always collecting. I have like 90% win rate. Every time I put a big bet down, everyone just, fucks right off and I just collect. But what happens when finally people start contesting, when someone has like a good hand and they're like, okay, let's call this motherfucker out. And the guy, he's like, hey, someone's calling me. I'm just going to shove even harder. I'm going to pressure them same way I always did. And all of a sudden, like, the other people don't back down. And the guy's like, oh shit, now the pressure's actually on me right now. Like before it was just free, just collecting. Now there's some pressure. Sometimes in those situations, that big stack player will lose. And what happens is he ends up distributing his chips around the table. So now you have people who are able to have competent account sizes and competent bets and actually cause problems for the person who's just throwing down, doing what he's doing, right? Now, when that happens, basically, like, we have a healthy, functioning market. So this means, like, this is a market where it's not really one-sided. Like, why do markets cycle? It's because of the natural human dynamics of fear and greed. At one spectrum, you have bullish weakness. They can't push anything up. There's no momentum. No one's participating. Short sellers every day just collecting. It's fading off really quickly. No bounces, nothing. It's just super annoying. Or they tried to buy something and got dumped on or got offered on, and they don't want to play the game anymore. So short sellers just accumulating, right? But short sellers don't always dominate the market. Sometimes short sellers get too aggressive, and sometimes short sellers come in and try to keep growing their accounts. They put significant amount of risk on because why not? I keep winning. And then they lead to massive squeezes, really big, bad situations. And that emboldens bulls to come into the market and push stocks up and ride the momentum and get huge returns. Now we've equaled the stack again. The bulls start being able to fight back. Bears start becoming scared or giving back some proportion of their money, or a lot of it potentially. This is how our market works. This is how the market's supposed to work. But what happened in the most unnatural way possible in 22 is that nobody was getting any chips. No one was getting any P&L. Only people getting it was people collecting those liquidation plays over and over again, and like massive. So what happened was, while you have most people just trying to do their own thing, you have these big guys coming off for big wins with massive risks, by the way. And they come into all the plays that everyone else wants to play. When they slam with their size, it's pushing the stock around up and down. So they're ruining everything for everyone. When the stock's trying to fade and they're trying to cover the position, they just hold the stock up. When the stock's going up and it's getting momentum, they can just slam it back down. And even if they lose, they're so far ahead of everybody that anytime they place a bet, it doesn't even really matter. Like it matters to you because that's your full account, or big amount of your account, right? In risk, but to them it's such a small proportion of what they made. So they just staying in the game for a long time. It's like if the blinds just keep going around the table and everyone just plays the minimum bet, the dude with the big stack is just eventually gonna just out survive everyone, right? Because everyone every day is you're putting up that blind. Like I'm gonna try this to trade this. I'm gonna try to participate. So I'm gonna have an entry fee, and then you just bleed a little bit, and it hurts because eventually like at some point what the equivalent maybe of a big blind would be is like if you take a max loss on the day. What if it's not just one loss that you took? What if it's like 2 or 3 losses you took? That's your max position loss. So every once in a while that cycle's happening. But again, like remember that big player? No, doesn't care. I'll keep playing this game. It's not a big deal because he knows like every once in a while there's that another. I don't know. The poker analogy is lost at this point, but basically what I was gonna say is, hey, if maybe he's at another table simultaneously and he can just win a lot there. But I don't know. Doesn't matter. Either way, he can always go back to his liquidation plays. Boom, boom, boom. Make a lot of money, okay? So you understand how unnatural this environment is, where there's no potential for any other side to gain any momentum or gain any footing in a market. And it took such a long time for this to balance out, to the point where it literally went for more months than I have ever recorded in my entire like career of just nothing going on. Like at the first month you're like, okay, well that's pretty normal. At the second month you're like, well, this is getting a bit long. On the third month you're like, what the hell? Fourth month you're like, I'm praying for something to happen, please. And then 6, 7, 8. Okay, now we're like literally in August right now. And you're like, okay, I guess we're ending this year the way it started. I mean, nothing's going to change, right? They're going to keep banking. I'm going to just sit here, do nothing. And that's all I can do. Just wait for the market to come back. Well, lo and behold, everyone says, I got to go join that trade. So everyone loads up into iLag. I've seen so many risk management like quote plans about it where they're like, yeah, I'm going to risk, 25-50% of my account on this trade if it goes wrong, and I'm going to have a super wide stop, so like it's very unlikely that I'll hit. That's what they said. And all of a sudden, boom, man, boom, fireworks. The funniest part of that was when Trade the Matrix called the dead bottom on a tweet saying it could go lower. That was the funniest thing for me. And literally hold it up the next couple minutes and immediately blew out every single person, like nearly. Now, there were some people who kind of hung on, right? But for the most part, a lot of those guys got called on their bluff. Like that stop you set out, miles away, it got fucking hit this day. And you took a big fucking loss. And that money transferred hands. It went somewhere else. It went to the other players. And when that happened, immediately the market self-regulated. Immediately. Like, from August forward of 22, things were tradable. People were participating. Money's exchanging hands. The stacks are a bit more even. And we have a market. Like, we are able to compete. We are able to take each other's money. And the thing is, when people talk about like, how, yeah, we're taking each other's money, sure, right? That's kind of cruel. But you know what? Like, for almost as much money I've ever made, I've probably lost about equal amount the other way. So like, if I made $1 million, I probably lost like 900,000. And the difference maybe would be like my profit. I mean, that didn't equal a million, but you know what I'm saying. Basically, like if I made a million, I probably made 2 million and lost a million, something like this. But probably a little bit tighter than that, actually. And so what I'm saying is like a healthy functioning market is when all of us are giving and taking. Like sometimes we win, sometimes we lose. But at the end of the day, it's transferring hands and it's being distributed. Now, what does that mean? Like, what does that mean in terms of edge? I mean, people make money, people lose money, and people, all they want to do is grow their accounts, right? Why do people get caught up in all these cycles, and why do chips just kind of get like shuffled around? It's because people don't treat trading like a business. Like, they don't get out while they're ahead, and they don't pay themselves at all. So, for example, like one of the biggest edges I feel, especially for a retail trader, is to take some of that money out, some of the chips off the table, and put in your bank. Because what happens is now that stack, whatever you put into the bank or took off the table, is no longer in play. Like it's not available to be taken like it should be. So you're reducing the amount of money in the system, and you're not risking as much yourself. And yeah, you could say, well, it'd be annoying if everybody took money out of the market, right? But the thing is, there's enough money in the market. Like if it's self-regulating and people are winning and losing, there's enough money in the market, trust me. So while everybody, like 99% of people, end up just winning a little bit and then putting it back in the market and losing it again, there are people like myself who win and then take it out. And I think this is one of the biggest things in trading, especially for long-term success, because if you're able to take money out of the market, not only does that mean you're a successful trader, but it also means that you're not going to be at your highest risk when inevitably the cycle shifts. Because remember, I told you it's self-regulating. So when the market's normal, it's completely normal for you to take an outlier loss of some sort. It's completely normal for you to, once you're at the most confident, once you have on a winning streak, for things to just go the complete opposite direction. And it's also the case for the other side as well. So by protecting yourself in these moments, you're prolonging your ability to trade and also kind of diminishing the effect that everyone talks about, which is making, a step forward and 2 steps back, or some other ratio of this, right? It could be 2 steps forward, 1 step back. Doesn't mean you have to get blown up or anything. But if you start wiring out of your account, all of a sudden, like, that doesn't happen anymore. It's not happening to the same effect where you're taking whatever ratio of steps you're taking back. It's going to be severely reduced. Like, all you've done is get ahead, essentially. And I have no better example than one that I shared with my Discord the other day. And basically what it was I was showing how you can be a winner even though you're a loser. And so in October, I was away for like 3 weeks. But in the time that I was there trading, I made about 30 R in the month. And 30 R for me is like pretty below average for the most part. It's not too big of a deal. But the main reason for this was I did experience some bad days as well. Like some days that are supposed to be bad, and that's just how the market works. Like sometimes you win, sometimes you lose. And sometimes it's bad because you might have won a lot. And the fact is I did win a lot this month. So eventually that there are those times where you lose and I give it back, and that's why my stat was below average. But what that number doesn't really show you is in October, I had wired out 4 times. So I wired out 4 times in October. I'm going to do the math here. So what my rule is if I have an outlier win, for me is like 10 hours on the day, I'll wire out half, right? So at minimum with 4 wires, that's 40 hour minimum. But there are days where I had like 20 hour or 15 hour, 17 hour. Okay. So let me do the math for you. So combining those 4 days, it was about 67 hour roughly. And I took out 1/2. So I took out 33 hour into my bank. So in fact, I made more R to the bank, not risked, as a profit that's not coming back into the account. Made more from wiring than I made in the entire month overall. And this is just one example. I've experienced this actually a few times since I started doing this, where you're not making money on paper, but you're making money as a business. It's coming into your account and that's it. The way that I see it is, even if you're sizing down a little bit, you're just, the next opportunity you're going to have to make money is just going to be a little bit less, but you're still going to take it out. So it doesn't really matter. Okay, who cares? Like, what I always tell myself is, well, if I deserve to be trading a higher size or whatever, or be in a different position than this, then I would have been already in that position because I would have made these mistakes, right? So you kind of fully deserve to be wherever you are in actuality. But what this does is this really kind of affects your overall expectancy, because as a trader, you're pulling money out of the market, which is exactly what you need to be doing. So I definitely just want to share with you a little bit about how you can win even though you're not winning technically on paper, and how markets are meant to be functioning, how some traders are basically bluffing their ass off until they get caught, how that affects the rest of the market, how it should affect the rest of the market, how you can stop this endless cycle of giving it back over and over and over again, how you can take money out of the market and actually have edge because you're now able to play, more hands. And actually, one of my friends made a tweet the other day. Well, it was not the other day. It was like a year and a half ago. And it was another poker analogy. And he said that he's one of those guys who likes to make big bets. And there's nothing wrong with that. But he said, I don't keep all of my capital in my account because I want it to be to the point where if I all in and I bust, that I can just reload. Like, I didn't show my full stack. So for him, it's kind of like, you know how in poker sometimes you just all in on a guy, right? But if you knew that you could come back in with a certain amount of money, then sometimes you can take those kind of risks, because then all of a sudden it puts so much pressure and so much reward on your side, right? And for him, that's kind of how he thought about it. For me personally, I wouldn't tolerate necessarily blowing up. I just kind of look at it like, yeah, I'm never wiring back into the account. I don't give a fuck. And if my size is smaller, then so be it, because I already know I can grow back. So that's the way that I would view it. But that might have clicked for some people, I'm imagining, because I thought it was a pretty good way of looking at it. Like, there's a complete difference between someone all-inning with everything they got and someone all-inning when they've siphoned off like a big proportion of what they actually are. It's kind of like an iceberg, You're like, when you're at Traders for a Cause and, I was sitting at the table with like Bella and all that. It's like, when someone goes bust, you're like, okay, nice. That's one person I don't got to worry about. And then they fucking buy in. Like, they swipe their credit card, and all of a sudden they bought $200 more chips, and then they're back in and they have a bigger stack than you. I mean, that's dangerous, And I think that's kind of what this is like a little bit. And I've heard other traders doing something similar, but again, like, please don't blow up. It's not even a good habit. In any case, to a lesser extent, right? Like, we're not all inning, but by wiring out and siphoning it out, placing the bets that you can place with the account you have, and being recognizing like this is all you have. There's no excuse. I'm not gonna bail myself out. Like, having that mentality of your back's against the wall, that's like the best place to be. And that allows you to basically have to be in tune with the market, number one, but also like build your runway out. This is especially important for beginner traders and intermediate traders, or people on their way, to say like, hey, I have 1, 2, 3 months, 5 months, 1 year, 2 years, 3 years of being able to trade with complete mental clarity because I bought myself that time. And that is priceless in terms of the return, because it affects your performance, it impacts your health and your happiness, and that affects your return. So I think it's so underrated. And essentially, I think that I've created like probably one of the best models I've seen. I've never seen anyone create a like really good model. Like, people say, I pay myself once a month or once a week, like a paycheck. Well, it's like, dude, we're not W-2 workers. Like, we make money randomly. Like, you could have a big ass July and like your August you make nothing or even lose money. So I don't think it makes sense to do this, because I think it'll have a psychological impact on you where it's like, well, I just sized down for no reason. Like, why did I just take money out? Like, what's the point of that? Or feeling like you're shooting yourself in the foot, or that it's just so out of your control and so without rationale, versus like, hey, I had a big day, I deserve to tuck some away, because you know what? So many times that I decided that I'm just going to keep it in and put that risk down the next day. How many times you've given that back? I mean, I can recall so many times. It's like, just because you have a bigger account doesn't mean you can't lose a lot of money. It's like, the more money you have, the more you can lose. I mean, if you think that, okay, I'm at 100K account and boy, I should be trading $1 million account right now. Like, that's where I'm at. If you think like that, like, and you're still making mistakes, it's just gonna hurt more at $1 million. Like, it's not like the game changes. The people like Livermore, suicide. I mean, you can go as far as you want, but there's always the risk. If you don't take money out of the markets, there's always the risk that you're going to give it back. And if you don't look at it correctly as what it is, right? And it's a sporadic amount of variance towards like how much money you make and when. And it's cyclical. People are constantly vying for dominance. You can't hold that cycle down for long, otherwise it just becomes a pressure cooker. And the market is meant to equally distribute across all the participants, even if it's at the expense of cannibalizing your own side. I'm not even talking necessarily about bull versus bear. Like, adverse moves, like short sellers covering where you're covering, can cause slippage, or not covering where you're covering and shorting into you could be taking your money, and vice versa. Everyone can affect everyone. It's not just like which side you are on. We're not like this eternal war. And in fact, like, I'm happy for bulls to be there because they create opportunities, as well as I'm sure they're happy that we're here because we create opportunities for them as well. So like, it's just balance in all things, it's nature. And it's good to see the market being like this. It's good to see that this happens on occasion. Else everyone would just be getting like stupid rich. And the thing is, you still can get stupid rich, but like, if the market didn't force you to be humble, then I feel like it'd be a pretty sad game, because then you'd have a bunch of assholes at the top But instead, I think for the most part, like a lot of the really successful traders I've met have been very kind, very generous, very humble people. And I think it's because what it takes to actually get to the top of this game is that humility and that respect for the game. And I think for those who don't respect the game, it's kind of just a matter of time, or you can get lucky. And the thing is, like, yeah, people get lucky because sometimes people bend the rules and they get ahead. Like, that's just life. You know, it's not really fair. It's the prisoner's dilemma. Like, you know, there's 4 quadrants. There's 4 decisions can be made. Like, you rat out the other person. They rat you out. You don't rat them out. You both stay silent. You both rat each other out, right? If you're the one who rats the other person out and they don't rat you out, you usually win. Like, you get the reduced sentence. You know, throw them under the bus, but you get ahead, right? And that's why the dynamic in life is kind of, well, sometimes people get ahead by playing dirty and they'll never get punished. And like, it's kind of like, okay, well, some people cut in line, you know, okay. But sometimes there's a good reason, right? I think we're all afforded it. It's like, imagine you're late for your plane, right? And you ask, you jump in front of the line, you say, please, can you let me go through? I'm late for my flight. Because everyone is in that neutral state, for the most part, like most of society, that it allows some people to get ahead. But then where it's a problem is when people are like absolute sociopaths and they just kind of take advantage and get ahead, and they will get ahead. And if you envy those people and you're like, well, this guy did that, like this guy just fucking no risk and like max, you know, he blows his account up or he takes a huge win, you know, like he can do it. Why can't I do it? Well, it's because like only a certain amount of people can do that before it becomes eye lag. You know what I mean? Like at some point, if you start doing that, you're gonna catch up to the fat tails that they should be experiencing and maybe potentially just dodge out of luck. So just think about, like, you do want to kind of recognize how the market works a little bit and try to stay somewhat in the middle. Like, I think you want to be, you know, equally offensive as you are defensive. And I think, like, naturally people are on the offensive because they think of reward first. And the dopamine comes in when they're, like, thinking of how big their win's going to be. And they never consider how much loss is going to be. The loss is almost always hindsight, where it's like, dude, what if I just took it out? Or what if I didn't size up here? What if I, you know, recognized that I could blow up doing this before it happened, you know? That's one thing that you kind of have to experience and learn on your own, I think. It's an emotional thing. I think you have to back that kind of with experience. And ideally, you kind of take some of the lessons getting passed down and just lose where you need to much smaller. Or you can basically just take it to heart and do it and never have to deal with that. Because again, like, you don't have to experience anything in trading as far as like taking a big loss or blowing up. Like, people who come in with good practices, such as the person that I mentored, do not have to experience the same things I did. Like, you didn't have to blow your account up to the point where you're risking $25 and try to grind that back up. Like, you don't have to experience that. Because why? Well, you're coming in with max losses. You're coming in learning how to earn your size as you're growing. You're coming in wiring out money, understanding dynamics of market. Like, all of that information is available to every single one of you. So you can either, you know, respect the fact or just keep it in the back of your mind so that when it happens to you, you know what to do. Because, like, even in this day and age, like, it's crazy that in even 2023, people are still learning, like, oh, I should have had a max loss. And it's not just your peers, it's like mentors. how the fuck is your mentor finally learning he should put a max loss in his account? I mean, that is like, you know, that is almost one of the first things you should ever learn as a trader, right? And as far as I know, I don't think anyone talks about pulling money out of the markets, treating it like a actual business without being completely, without context. I mean, it's kind of like, I always use this example because it's so true. It's like, oh, how do I read tape? Well, just record your screen and you'll fucking get it, Billy. It's like, bro, no, like, what am I looking for? Like, what am I trying to understand? No. Just like, you need like 10,000 hours and then, yeah, you'll get it, right? That's kind of like how it is. And that doesn't really work for me. Like, I need to understand why. I need to understand the context, the nuance. I need to understand how it can be executed with 100% accuracy and make sure I'm always doing it. How I can anchor the emotion to create the correct action as well. So for example, like, there are days even now when I decided, I mean, it depends if you read the recent blog I wrote, but if you have, basically the line is that after 22, I didn't wire out for like a year and a half. And I was just going sideways, And the only time I started really moving forward, like in a really big way, like snowballing, was after I decided to start wiring back again. Like the thing I did for the first 90% of my career, wiring out 90% of my profits, what got me back from the brink of risking $25 back to making $1 million net, and that, all the way from the brink, all of that included the wiring. That was part of the process. Once I stopped treating trading like a business, when I stopped making money, and I'm pretty sure I would have made money even without making money, the way that I explained at the very beginning, because you're always going to have good days here and there. Like, it's not like, I mean, if you literally only have bad days, you're either learning or you just suck at trading, right? You get better. But I'm talking about like someone who can make a lot of money. Like, this is not like, I'm not new to the game. I made a lot of money in COVID. Like, you're going to have good days all the time, but you're also going to just have some bad days. And especially when the opportunities are not there and the liquidity is down, I mean, good luck trying to make it back, right? But what I'm saying is, like, even with the example that I gave you about October, even if that net P&L at the end of the month was 0, I still would have brought 33 Rs out of the market to my bank account. You see what I'm saying? And that money can be used in a lot of different efficient ways. Like, we always think about, oh, let's use the money for tax deductions or investments, right? But when you don't necessarily have an income, the best thing you can do is actually just have your cash growing in a passive kind of investment. So for myself, I use like a hedge fund, but like we're talking like money market accounts and stuff like that, or some sort of asset that returns, passively. And then when you do have a big year, all of a sudden you have this big pile of cash that you can throw at deductions after deductions and investments, earning passive income and deductions at the same time. And now you have like this, you've basically set yourself up for the future. You also, for the beginner and intermediate traders, you've also bought yourself like a significant amount of runway. So in the bad times, you can kind of accept this. In the drawdowns, you can kind of stay mentally clear. And, it's like, after doing this, I've wired out 17 times in the past 6 months. Actually, less than that. 5 months, I think. And I'm about to wire again, so it's been like 18 times. And I don't think this year has been spectacular for me either. Like, it's about average, maybe a little less than average. So what I'm saying is, like, this momentum is all from trading like a business and wiring out and understanding how to do this. So what I'm kind of suggesting is, like, because of the way the market works, because of the way the dynamics of all the, players at the table is like, consider taking money off the table and allowing yourself to be in this game longer and do yourself that favor, because really in trading, the longer you're in the game, the more exponential your growth will be, the more money you'll make overall. And all the little shortcuts people try to do always ends up in a very similar distribution. Like, again, someone's going to get ahead. Someone's going to do it and get ahead. Okay, fuck him. Most of you are not going to get ahead, okay? A lot of you are going to lose, and a lot of you are just going to go sideways. Absolutely just go sideways. Like, you're not going to lose. You're not going to make any money. But why not allow yourself to stay within this game for long enough to the point where you can catch your stride, where you can make that breakthrough, where things click for you, whether it's the market, whether it's an idea, or, you know, whether you develop some sort of improvements upon your strategy or process, and then you can push it. And then I would still suggest that you take money out. And what I want to say is, even by this point, like the 18th time that I'm going to wire, am I getting tired of it? A little bit, yeah. Like, sometimes I do think about, well, why don't I just grow some more, man? The same trap that always happens to you anytime you ever get ahead. But the thing is, like, I just designed a system. Like, I created a system that tells me what to do when. Not even a trading system. It's like, yo, you have 10 plus hour day, take out half, go ahead. And I send the email the night before, it just fires off in the morning, and boom, it's done. You know, like, I don't want to think about this. I want to stay vigilant about it. And I bet you in a year from now, I'll have wired out 100% of the times I was supposed to. And I will be so much further ahead than I thought possible. And I think that if you start, you'll feel the same way, because that's literally how I feel right now. And that's how I can imagine the future going, because I'm experiencing exactly what's happening as a result of doing this again. And it's a beautiful thing. I mean, it makes trading fun. Like, even when I'm losing, I'm still energized and happy to come back. And just imagine all the times that you lose and you're like, fuck this, I don't want to show up tomorrow. Well, you know what? Like, usually when you don't want to show up is when the market's going to turn up for you. So if you're not, like, able to keep your mental clarity about you, and you say, oh, I'm just going to size down tomorrow, I took a fat loss, you probably messed up the opportunity to make the next growth in your account, because that's what cycles are. As soon as people get crushed, usually we start seeing the turn pretty soon. I'm sure you can recognize that pattern. And if you haven't, maybe you haven't traded long enough, because I feel like that's really part of trading, especially in small cap market. All right, so I didn't look at chat whatsoever, so I don't know if anyone said anything. And there's no reason for me to look at the chat at this point. So I'm going to just end the call, or end the video, and I'll just hang out. So I hope that was kind of an interesting little story thing.